It's really good to meet you here in Hanoi, Raymond. Raymond Sia is the Chief Executive of Canadian Bank in Cambodia, in Phnom Penh, in Cambodia. And you've been Chief Executive for
5 years.
5 years now. And he's always invited me to go visit. And I thought that running into him here in Hanoi gives me a chance to catch up. Raymond, how are things in Phnom Penh, and what are some of the things that you are working on at your bank, at Canadian Bank?
Yeah, thanks so much, Emmanuel. I think it's really great, catching up with you here in Hanoi. I think in Cambodia itself, as you'll be aware, it's a very competitive market. We have close to 60 commercial banks, more than 80 microfinance institutions. But notwithstanding this stiff competition, it's still very much an exciting market because there's still a lot of opportunity to grow, supported by regulators and authorities which are very business orientated as well as pragmatic in some of their implementation of policies. And for Canadian Bank, we have actually started our digital transformation and the transformation of ways of how we can actually improve customer service as well as reaching out to our customers over the last 2 years. And this would likely be a 5-year journey with obviously certain milestones that we actually set for ourselves. So part of this digital journey would actually be looking at automating some of our processes. So we actually started with our loan origination system that we have actually started last year. So we are now moving all our manual loan processing into this particular platform. And obviously, just like other commercial banks, we have actually revamped our mobile banking app as well. And for this year, the target would obviously be to really expand our reach in terms of reaching out to more customers, but more important, to ensure that we address what the customer needs at the end of the day.
You know, Raymond, what you've just told me, if it came from a banker in a more developed market, I'd say, well, that's life as normal. But in a country where you have, 17 million
17 million people.
Population of 17 million, 60 financial institutions, and licenses are still being given out. Capital cost of entry is low. And yet, you are investing in all of this technology. How's market share, moving in Cambodia between the major players? How much market share have you captured? How gratifying is it, and how difficult is it to keep your market share in one of the most dynamic and open banking systems in the world?
Very, very good question, Emmanuel. I think if you look at the banking landscape in Cambodia, the top 5 banks would actually capture 80%, close to 80% of balance sheet transactions, loans as well as deposit. And obviously for the last year itself, while growth has continued to be seen, it has actually been a bit more moderated. And I think this is probably the trend over the next year or so, with what we're seeing with the liquidity tightening across the globe. And certainly Cambodia is not an isolated island. We are certainly also impacted by what's happening globally, right? And for bank investments, in particular for Canadian Bank, you're absolutely right. We have always been, I would say, very sparing in our investment costs. So we are also mindful that technology becomes obsolete very, very quickly.
That's another reality that you need.
We are very mindful of that. So we are very careful with our investment, yet we still need to invest because ultimately it's about the customer, what the customer needs. And from what we observe, the overall psyche of and the makeup of a customer in urban areas, say like in Phnom Penh, compared to say the provincial areas like in Ratanakiri, for example, would be very different. So how we reach out to them would be very much a different proposition altogether. So the branches, the brick and mortar model would probably work better in some of these provinces because for the provincial customers, they will still like to have that look and feel. At the end of the day, when they come to a bank, they want to actually see and be greeted by the teller, to know that there's a branch manager taking care of their deposits or actually helping them with the disbursement of the loan. Whereas in the urban areas, certainly digitization, especially over the last 2 years, due to the pandemic has actually accelerated a lot.
Okay, what is your cost to income ratio?
Our cost to income ratio, I would say, it's probably one of the lowest in the industry.
Okay.
So we are keeping it around at about 35%.
Okay.
At this juncture, but obviously there are pressure. There are I would say upward pressure on costs.
Okay.
But we have always kept it very modestly in
Right.
that region.
And in terms of income, what's your net interest margin? I mean, I want to know how profitable is the core business?
Sure. So, I mean, if you look at NIM itself, over the last 3 years, there have been a lot of compression, and the compression has been a lot more evident the last 12 months.
Right.
With what's happening in the US, where rates are so high, and where we also have to also adjust our cost of deposit a lot higher. But I would say but if you look at it, I would say from Canadian Bank, what we have seen in terms of our audited accounts, we're still finalizing our 2022 audited accounts. But from the unaudited accounts, our NIMs will be in the region of about 5%.
Okay, that explains it. Raymond is one of the most experienced emerging market bankers I know in the world, and in the most exciting country of all, which is Cambodia, which continues to allow banks to be set up. But the net interest margin is comfortable enough, to run a highly fragmented a business in a highly fragmented marketplace.
Yes. I think just to add on, Emmanuel, 5% is what Canadian Bank and some of the commercial banks are actually enjoying. If you look at microfinance, the NIMs will certainly be richer than that, right? And of course, the National Bank of Cambodia has actually kept lending rate at 18%. So this is the maximum that you can charge. So the NIMs would actually be, I would say, would be slightly higher for microfinance. And of course, in different banking models, right? Different banking models would actually attract different NIMs.
So, being a banker in an emerging market country, yes, the central bank gives you a very comfortable NIM, but you are faced with a number of other challenges. Open marketplace, fragmented competitors, subscale competitors who destroy your pricing, and then having to service customers on all channels, still the same, even physical channels much more than in a developed marketplace, and so on. So I've got a lot of respect in terms of what you do.
I'm still learning, Emmanuel. I'm still learning. Believe me.
No, great catching up with you here, Raymond.
Yeah. Thank you, Emmanuel.
Cheers.
Pleasure.